Welcome to CPA Australia's live webinar. Presenting today, we are joined by Drew Fenton and Monique Solis. Chairing today's webinar, we're also joined by Michelle Webb. I'm just going to welcome everybody into the conversation, just opening up your mics there. Good afternoon, everyone.
Hi, Linda.
Good morning, Linda.
All right, I'll just hand the control over to you as well. Enjoy the webinar, everyone.
Thank you. So welcome everybody to this webinar. So Drew is the Managing Director of Fenton Green, and Drew, who is also a CPA, has a wealth of knowledge on accountants insurance and partners with CPA Australia in the provision of risk management education for members. Fenton Green is CPA Australia's preferred broker for professional indemnity insurance, managing the CPA Australia Professional Indemnity Insurance Scheme. Joining us also for the Q&A, we have Monique Solis from Fenton Green and Claire Bannon from CPA Australia. So I'll now hand over to Drew to get us started.
Thank you very much, Michelle, and welcome everyone today to this presentation. The intention of this presentation is to provide you with a little bit more knowledge, a little bit more understanding about the risks that small business accounting practices and your clients are met with these days, and some basic information about the insurance market and how the transfer of that risk can assist you in private practice. We're going to talk about the business risks that your practice face and how Fenton Green, with our offers of insurance, can help. But can I just say here, even if you do not have insurance with us, we are more than happy to assist any CPAs or CPAs clients with questions in the insurance area. We're a bit like the tax department, we're here to help. So today, in a brief summary, it's always good to know the rules, and the rules are what the insurance landscape is at the moment, and how it's affecting you when you purchase insurance. We'll quickly go over CPA's bylaws, understanding what your minimum requirements of cover are, an understanding of how you can understand what your risks are and managing your risk profile, and then we'll go through what CPA has put in place with Fenton Green about the insurance offerings to protect you in public practice. Right, as I said, it's always good to understand the rules of the game. The rules of the game is that we deal in effectively a global insurance market. Breaking that down into Australia and New Zealand, our New Zealand colleagues joining us today, effectively we have 4 sorts of different insurers participating in the professional indemnity and the general insurance market. These are Australian companies like QBE, like Vero, like CGU. We have the American companies like AIG, Chubb, and alike. We have always a strong presence, and I know from my experience, New Zealand has a strong presence of Lloyd's participation in the market, and then we have the reinsurance market. Can I just say, because of the way the world is structured at the moment with low interest rates, insurance is also going through a time of transition. And Lloyd's in particular are reviewing everything they do. They're reducing their capacity, as in they're not growing, they're reducing, to better define what risks they are accepting and ultimately driving a bottom line. So that's why we are seeing their results improve a little bit, but ultimately what that means is that they're more prudent in relation to the risks that they are looking at, and ultimately the premiums are going up. Also mentioned here, cybercrime is a new risk profile that is significant to all practices. You should be undertaking a review of how you mitigate that risk and whether you need to buy cyber liability insurance. Our recommendation is you should be purchasing this insurance. As though whilst the Australian economy, New Zealand economies are reasonably stable, the accountants still continue to face the risk of litigation. You hold yourself out to be a professional. You accept fee for service. You, under our common law systems, are liable if your client or a third party believes that they have suffered an economic loss as a result of your work. Just briefly, this is a little map that we put together about where you see the insurance market. So the question is, where on the clock do we see the market? And there are different influences, there are different results. So what we're seeing is that the clock is probably about 7 to 8. Some people might have a different view, but it's a difficult market, tightening of what we describe as capacity, and an ongoing review of rates. So it's not the best time to be purchasing insurance. But in the bigger picture, can we say we haven't got to a point, unlike some professions in Australia, where basically you can't buy the insurance? And the best example of that is the building surveyors here in Australia. Right, just quickly going through CPA's bylaws about what your minimum requirements are. You must hold professional indemnity. It's under bylaw, set out under bylaw 9.8. The minimum requirements do differentiate between activities, but if you hold a public practice certificate, you must have $2 million in Australia and $1 million for New Zealand. There are many differences and variations in insurance policies. They must be written by what we describe as an APRA, or the New Zealand equivalent, which means a registered insurer, which effectively provides not an ultimate guarantee, but certainly about the compliance, financial security of the entity you are transferring your risk to. I noted recently there was an insurer in New Zealand default. So what CPA is saying is they won't let you go outside the bounds of the normal insurance market and insure with the insurance company of Vanuatu just to get a cheaper premium. You transfer your risk for certainty of compensation on the other side. Within the cover, there are certain provisions in relation to excess, in relation to dishonesty and fidelity cover. It must be broad enough to make sure it covers your normal public accounting services. If there's any question about the activities, please speak to your broker or your insurer. The retroactive date means that it covers past work, so it must be reflective of the time the practice has been in business. There is a common misconception that you can only get sued for work you've done in the last 6 years. That is wrong. It is from when your client becomes aware of the loss, they have 6 years to bring an action. So if you did some work for a client 20 years ago and they only become aware of it now, they now have 6 years to bring an action against you. Cover for everyone affiliated with the practice. This is really relating to subcontractors. If you bring a consultant in, your cover must be broad enough to cover their activities. Defence costs, what the bylaw says is it's $2 million or $1 million for compensation to your clients. Your costs must be in addition to the minimum limit. That means your defence costs, your legal representation if you get into a matter. And to give you an example there, we had a claim here in Australia a few years ago, $1 million compensation, costs were $950,000. And provision of runoff, so that means again, if you were to wind up your practice or sell your practice, that you have cover in place for 7 years post ceasing your practice or selling it. How do I determine what PI cover I need? CPA set minimums. I think our strongest recommendation is you go back and have a look at the risk profile of your clients. If they're all mums and dads, PAYG type clients, you have a low risk profile. If you have the 25-year-old property developer geared to 110% with $100 million in loans and you're providing service to them, my recommendation is you need to buy as much PI cover as you can. Sometimes it's best not to provide a service to a client where you know that they are in financial difficulty, as in not walk away from them, but 50% on average of claims come from financial difficulty of your clients. So again, please review your clients on an ongoing basis. Can I afford not to be covered appropriately? Insurance is a transfer of your contingent liability of being in business. It is, in the overall context of your practice, in our view, the most important insurance policy that you take out. It ultimately is covering your personal liability post a client taking an action against you. So our recommendation here is please make sure that you are appropriately covered. If your PI policy does not cover me, what happens? Well, ultimately, your client has a contract with the firm that provides the service. If the policy is inappropriate for the services you provide, then the liability rests entirely with the practice or you as an individual providing that service. So again, your financial assets are at risk if your professional indemnity policy does not cover you. CPA has a very good notes on setting up a practice, and I would certainly recommend that you review those. Our insurance is only one way to protect yourself in relation to risk. Corporate structures, etc., are other ways to assist you in that area. The types of claims. Liability claims, professional indemnity claims are always prevalent in society, and we break down this into clients that get into financial difficulty. So, and I should just clarify this, we also live in a world where it can't be my fault. It can't be my fault that I lost some money. So we see this with clients that get into financial difficulty, they must blame somebody. So they line up their consultants, whether it be solicitors, builders, whether it be accountants. So again, the financial viability of your client is very important in relation to your risk profile, providing services to them. Can we just say cyber risk is becoming more and more prevalent? We provide cover now to well over 1,400 firms in Australia for cyber cover. It is in the newspaper effectively every day. Large institutions get hacked in Australia, Australian ANU, National University. They were very good the other day. They presented a full-blown summary of what happened, how they found out about it, and what the consequences were. We need more transparency there to help people, because all we find out now is we got hacked. The more transparency in relation to cyber is important for the whole community. In relation to activities for accounting, tax is always the most numerous, just because of the activities, multiple, small amounts, etc. But without question, audit is still an important part of the overall claim volume, although few in number, the numbers involved are significant. The other one is that we've seen when economic times start to get a little bit tough, we find that dishonesty and fidelity matters come to the fore. So again, it's a case of reviewing your practice, make sure that you have tight controls, make sure you have controls, your clients have controls over monies. So the 101 of managing your risk is trying to identify what your risk profile is, and we'll take a broader context here of the practice overall. Identify your risk. We would simply break this down into two components. One of them is the assets you own, such as in a personal sense, a house, car, in relation to a business, a building possibly, contents of the building. And I also would put in there people, whether you have key man insurance, you have those sorts of insurances in place. So they're nice and simple. You can identify them. The liability side is much more difficult. This is the professional indemnity, the public liability, the employment practices liability, the workers' compensation liability. Then we move on to, we quantify it. What are the consequences of something going wrong? Have I got enough money in the bank to meet that loss, or do I need to treat the loss by either stepping away from that part of the business, or, for example, selling the building so I don't have to insure it, or do I treat it in another way by contracting out of it? Do I just not do that work? The risk of audit is too great. I only do 2 or 3 audits a year. I don't do it. Do we avoid the risk altogether, as in it's all becoming too difficult, I'm going to retire? Or the last one is you've decided to continue with the work, you transfer that liability via an insurance policy. How do we try and reduce our risk within the practice? And again, this is really assessing the risk in relation to more the professional indemnity. Please, wherever possible, have appropriate documentation, proper file keeping, and importantly, letters of engagement. Again, CPA emphasise this. Letters of engagement tell your clients what you're going to do, but it also clearly states what you are not going to do. Letters of engagement, very important. Again, know your mandate, what is your skill set, and if something comes up which is outside your skill set, please refer to an expert. Again, CPA, your partner in business, has a very good referral system. We have a couple of very large claims at the moment where small practices have undertaken work which they did not have the competency in, and they've resulted effectively in million-dollar claims. As noted earlier, please review your client risk. I often ask this question, are all your clients honest? If you don't think they're honest, they're always late, you think that there's money under the table, our strongest recommendation is review them strongly, if necessarily exit them. You're better off to go and have lunch instead of always being involved in a client that is not professional. This is a very difficult one. Know your partners and employees. Make sure that they take annual leave. Make sure mental illness these days is again in the newspaper every day. Please look after your staff. We have a very serious matter here at the moment, millions of dollars. My view is that the chap had a mental illness, gambled away, not quite tens of millions of dollars. It's a nightmare for the partners left in that business. We see a lot of claims arise where I followed up the debtor. At what stage were they? 120, 150 days, and they want to sue me. They're not going to pay. I want to sue them. Please have a strict debtor control. If there's something your client is not happy about and is not going to pay your invoice, get onto it early when it's fresh in everybody's mind. Do not let it linger on a 180-day debtor outstanding matter. Always act professional. I know some of our clients can get a little bit emotional at times, but never let emotion get involved in business. Always be professional. Again, we've had some matters here with CPAs where emotion has got involved, and at the end of the day, it only muddies the waters. So please be professional, put things in writing, try and understand your client's position. Again, please review your overall risk profile, whether it be for the assets you own, your people, and the liability that the practice incurs on an ongoing basis. And nearly as important as all those put together is make sure that you have good partners in your business. CPA have a wealth of knowledge. Anything that's happened in your practice, they know that it's happened in another practice. They are across accounting. We would also recommend that you have good legal partners, a good local membership base to bounce ideas off. You are not an island. CPA is here to help. That's their purpose in life. I mentioned earlier on about managing your risk profile. Again, it's about the property, about the assets, and it's about the liabilities. And I think we can move. I think I've covered on that one pretty well. Right. CPA, in conjunction with us, we've put together a suite of insurance offerings depending on the wants and needs of the practice and CPA members individually. So in Australia, and also there is ability to join in New Zealand, professional indemnity for the practice, a mini policy for those that do a little bit of work in relation to clients of which are paid for. Unfortunately, I think that is only available in Australia. We have a global professional indemnity policy for all CPA members worldwide. Again, I think in Australia we only have the cyber liability insurance, but that is certainly readily available in all markets, and I strongly recommend you investigate that. Office insurance. We have a corporate travel. Again, these last four Fenton Green has set up with CPA. They are for Australian practices, and the last one being a new offering we have in relation to tax audit. Right, the CPA policy we provide here in Australia is for those in public practice. It covers everything that CPA says is an activity of a CPA member in public practice. Some of the insurance policies you might buy are not as broad as that. Some of them try and define what accounting services are. You need to be careful there. It certainly provides defence costs in addition to the sum insured. It also provides cover for employment practices liability. This is becoming very topical here in Australia at the moment through underpayment of employees. But this liability there is really about discrimination, about wrongful dismissal, about sexual harassment in the workplace. So again, if it's not within your professional indemnity policy, we would strongly recommend you explore that cover. And within our cover here in Australia, we also include cyber liability. So I should point out there, at an additional cost for a couple of $100,000. Again, if you don't have that cover, we strongly recommend that you explore that on behalf of your practice. We can't emphasise enough that the risk profiles of your practice change over time. This can be in relation to the type of clients you have. It can be in relation to the way you communicate with your clients. It can be in relation to the type of software you or your clients use. It can be in relation to the ATO putting new and more stringent regulations. It can be in relation to the new Privacy Act or amendments thereof. It can be a result of royal commissions. So it is not something you can just set and forget. So as a result of a risk profile changing, the insurance industry, hopefully on a reasonably proactive basis, does understand that this is happening, understand that there are liabilities being incurred by practices, and as a result they come up with new insurance policies. The first one, which I just briefly touched on before, was employment practices liability. And it's you can either buy this as a standalone cover, or you can buy it as a part of your insurance policy. your insurance professional indemnity policy. But the idea here is that it is covering your liability for your employees. And we've had a number of claims where they don't even have to be your employees. As in, I was discriminated against by not getting the job, and they take an action against the firm. It doesn't really matter how many employees you have in your practice, we would, as noted, strongly recommend you explore that cover. The cyber liability is the new risk profile that we are all exposed to. We are all connected. So I'll just leave it there because we have another slide in a moment. So we're all connected to our clients, we're all connected to the ATO, we're connected to Google, we are connected we're connected to our phones, we're connected everywhere. So look, we'll just ask our first polling question now, and we'll explore this one a little bit more.
So Linda, if you could pop up the polling question for us. So the question is, has your practice ever been a victim of a cyber attack or event? So you've got 40 seconds to respond. If you can click on A, B or C, and then remember to click the submit button, which is at the bottom of your screen on the right-hand side. Otherwise, the poll response won't register. So you've got 20 seconds left to go, A, B or C, and then click submit. Okay, so we have 54% saying no, 17% saying yes, and 14% saying they don't know. Drew.
Thank you, Michelle. Cyber, and we call it cyber liability, but really this cover here is, which we'll explore in a moment, is really about your exposure and a potential liability to others. If we look at an accounting practice, I'm saying an accounting practice is at the higher risk profile of the business community. If you're the local milk bar, I'm saying you're at the lower end. In an accounting practice, you have my full financial DNA. So the information you store within the practice is, in my view, much more valuable to those that want to penetrate, copy, sell, than the local milk bar. So for a start, you're at the wrong end of the scale of the risk profile. The risk profile, as I just said, is broken down into two: the liability to others, so your systems aren't up to scratch and you cause a third-party loss, and then your first-party loss. All my data's been wiped, etc., etc. You can either, at this point in time, if you take out professional indemnity insurance with us, either add this to your professional indemnity policy, or you can purchase this as a separate policy. The one that Fenton Green has put in place with CPA is really tailored towards accountants, and certainly covers the liability side, hacker damage, extortion, etc., etc. Just to go in to a little bit more. What exactly is covered? These are the incidences, or some of the incidences that may happen to your practice. And it is a case where a third party wants your information, or effectively they want your money. So we had an incident where there was an accidental dismantling of a firewall, and as a result of that, our client got hacked. Some of the policies are very stringent on about what antivirus software you have. Some of them aren't. If you're ever buying this this type of policy, please be very careful about what the terms, conditions of cover are. The policy covers first-party cyber attacks, so that means they might put up a ransom note, and you have to pay the ransom to unlock your system. We have here crypto locker virus attack, just a normal third-party cyber liability exposure. Again, this is where something comes from your computer and it goes to one of your clients. They then get infected, they lose money. And a good example of this was a robotic door factory maker, a door maker, German robotics. A virus got in, they were closed down for a month. It cost them a month's worth of production through a virus. Cyber extortion, which I just mentioned. So the question is, what does the insurance cover, and why should I take out insurance? You take out insurance in my view because of the telephone number, and that might sound really silly, but what happens is something goes horribly wrong with your computer system. When you buy the insurance, you get a telephone number. You ring up the telephone number, which is obviously a representative of your insurer, and you tell them what's wrong, and then you have help instantly. Your IT consultant may be able to help or maybe not. The difficulty we have with this risk profile is that it's an ever-changing risk profile. The viruses that go around really only have a lifespan of somewhere between about 2 and 5 days, and then they die out and another one comes along. So when you take out insurance, what you have is you have the knowledge and skill set of an expert who deals in this on a day-to-day basis, helping you get through it. The cover there is really the loss to your business in relation to the interruption of time to your business, the rewriting of records, the putting your computers back together and getting active again. It can also be certainly a payment of a ransom note. It is not normal for insurance companies to pay ransoms, but in some cases it's better off to pay the ransom, get your system back. There is certainly, as I noted, loss to others. This will become more and more prevalent over time, that you're exposed to not having appropriate antivirus software. It gets transferred to somebody else, they have a significant loss, and they come looking for somebody who caused that loss. It certainly covers all the costs in relation to putting your system back together. One of our more major claims recently has been a business interruption to an accounting firm, some $150,000 in loss of profits or additional increased cost of working. And as noted, the crime component, which is the payment of effectively Bitcoin to the hacker. A couple of claims. CPA firm used a third-party cloud-based software provider to hold confidential information. The cloud provider advised the CPA firm that their account had been accessed by an unauthorised identity who had deleted data relating to 5,000 clients. The client was unable to trade due to the missing data and limited access to their software. The insurer appointed an IT friend. This is the help you get on the other side and at the cost of the insurer. The insurer appointed IT forensic consultants to assist the client to investigate whether the systems had been compromised. The insurer assisted the client in notifying of this data breach to the Privacy Commissioner under the Act. The total cost of the claim was $124,000, including business interruption. So this was certainly a sophisticated matter. The question is, does your IT consultant know how to handle this? We obviously have a data breach, which is a Privacy Act. Within the suite of consultants that the insurer has is IT. It has a PR firm at your disposal because you might have to write to all your clients advising you've been breached. It has solicitors who can advise your legal obligations in relation to breaches of the Privacy Act here in Australia, and certainly solicitors on the other side of a potential liability claim. A hacked email account. This is becoming more common. By-partner firms, so you think they're reasonably sophisticated. One of the partners' emails hacked, resulting in a hacker changing the account details on an invoice to be paid on behalf of the client. The funds were transferred to the hacker's account. It is very common for hackers to enter your computer system and just sit there for months, watching and seeing what's going on. That's what they did in this case. Altered the bank details, money got paid. As a result of that first party loss, our client received $25,000 in compensation, and the third party received $65,000. So again, this incidence of hijacking somebody's email and system and sending out false invoices or information is becoming more and more common. CPA has a very strong community ethos, and a part of that is at the board level of CPA. They have put in place a global program for all CPAs who provide work to not-for-profits for no fee. If you are paid a fee, you need to take out your own professional indemnity policy. Let's say this is a global program that CPA provide to all members. So if you're doing pro bono work for the local club or community, you have automatic professional indemnity insurance for your work. Again, there's a reference at the bottom of that slide for the CPA website there. Again, this is only available for Australian people, but what CPA with Fenton Green have put in place is what we describe as a mini policy for private work. So this means either work done in your own name outside the practice, or if you're not in practice, for somebody like me, and you do a little bit of accounting work, it covers you up to $10,000 in gross fees per calendar year. It is a restricted cover, and as per the bylaws, the sum insured on this one is $500,000, reflecting hopefully normally the type of work that's undertaken. You know, families, tax returns, or maybe something small for a small business with small fees involved. Again, looking at the assets of a practice, office insurance is broken down, and the insurance industry has grouped all these different sorts of covers there into effectively one policy. I would break down CPA practices really into two: those that may just be a sole practitioner, may even work from home. So the most important component there is the public liability. So if you're just working from home, you do need public liability. If you come to my office, cause an accident, my building burns down, it covers property damage. It's a physical event. Or if I come to your office and I trip over the mat and hurt my knee, that is a public liability event. If you have an office, whether that be a rented office or a building, all those other covers are available to you depending on what your obligations are. So that is the insurance industry meeting the needs of those in business, putting together a comprehensive cover for you. Corporate travel. This is not overly big in the professional services, but our firm certainly has it, and we provide services or this policy to I think about 100 accounting practices. This can be seen as a pure business covering you whilst you're on business. The covers can vary quite a lot in relation to principals and employees, but if for whatever reason you're travelling overseas, we strongly recommend that you have travel insurance, and really for that medical component. We have another client who had a member go overseas and unfortunately got shot a number of times. That claim was just a mere $750,000, and we certainly had another claim, a heart attack in America, and that was about $150,000. So corporate travel can also be seen as a possible benefit to employees. There are some covers available now that will cover employees for their leisure travel as well. So we suggest, depending on your risk profile, consider that insurance. Directors and officers. Again, most accounting practices are SMEs, but more and more these days are being structured in relation to a company structure, and that's presumably on the advice of their solicitors and their own understanding of tax law. Within the insurance industry, you can now obtain, it probably describes something slightly different to this, management liability cover, which covers you for directors and officers insurance. So if there is a company structure in place, there is a liability associated with being a director or officer of that company, and it's the intent of that cover to look after those risk profiles. They also have additional covers in there of potentially crime, of statutory liability. Again, it's a group policy. But if you think you have an exposure there, by all means, have a look at this. There's a note there that CPA members who may be appointed as a director or officer of a not-for-profit. Again, this isn't always about the practice. We're here to look after CPA members generally. Not-for-profit organisations are invariably, it's a very broad statement, can lack good governance and good controls, and we would strongly recommend that if you sit on the local kindergarten, football club, etc., and accept an appointment of a director or officer, that they certainly have insurance in place just in case something goes wrong. Tax audit insurance. This is about to be launched, a new offering here in relation to CPAs in Australia. No client likes to receive a note from effectively a statutory office where they need to put in a return, and that can be either state or federal. And invariably there is a little bit of angst back against the accountant in relation to why me? Well, it must be my CPA's fault that I'm getting audited here. So what we have done is we have built, and as I say, this will be launched in a very short period of time, is a tax audit cover, and it covers all your clients automatically. So what it does, it covers the costs of responding to the review or the audit. There is another offering in the market at the moment, which you have to write to your clients and get them to accept the money exchanges hands, etc. We have developed this new offering, which will be digital offering, offer and acceptance online, and it will be really no different to taking out your professional indemnity cover. It'll be one policy for the practice covering all your clients in relation to returns of which the practice has submitted on behalf of your clients. Again, this is a value add to the practice in relation to a benefit to your clients. It's saying the practice has taken this out. The accounting firm, I'd like to point out here, is the insured and makes the claim. The client is not involved in the insurance process at all. The accountant makes the claim for their time responding to the review or audit as initiated by the government entity.
So Linda, if you could pop up the polling question, please. So we have one last polling question for you just before this webinar closes. So if you could again click A, B or C, and remember to click the submit button at the bottom of the screen. So the question is, if you have ever received a tax audit or review for one of your clients, do you charge the client the real cost of your professional time and services to respond to the audit, or do you absorb your fees to keep your clients happy? So if you can click A, B or C and then click submit, you've got about 15 seconds to go. So 28% said A, 30% said they absorbed the fees, and 15% says they already have tax audit insurance. Do you have a comment, Drew?
My quick comment there is that, look, this is something that our clients are always wanting more from our practices, and we can see there that 30% have absorbed some or part of the fees. My view is you're a professional, you provide a professional service, you should be receiving full remuneration. So maybe this is something you should be considering. As I say, this will be out in the next month or so.
So we have a question from Darren. Is there a difference for an ATO audit versus an ATO review?
No, no difference. We treat them exactly the same.
So Darren's comment after that was that some policies do not pay out if it is an ATO review.
Yeah, no, ours does.
Okay, excellent. So there's only a few minutes left. If anyone has any other questions, if you could type them into the chat box now so we can address them before the session closes. So this is just a list of some upcoming webinars. And the one on the 14th of November, that is now live. So I've just posted a link into the chat box for the registration page for that, as registrations have now opened for that event. And on the next slide, we just have a list of resources for you. And then the last slide is contact information for Fenton Green if you would like to contact them, and also for Apex Insurance for our members in New Zealand. So we'll just wait to see if any questions come through. Drew, do you have a closing comment?
Look, just thank everybody for their time. As I say, your risk profile does continue to change and more frequently now than it has in the past. And as I say, if there's anything there you'd like any information on, you certainly do not have to be our client. All means, please call. And can I recommend, CPA has enormous amounts of material available on their website. This is a great resource for any practice. Thanks, Michelle.
Thank you, Drew. So thank you all for attending. We hope this session's been beneficial for you. Kahoot will be sending out a copy of the webinar recording to you. So I'll now hand over to Linda to close the session.
Excellent. Thank you very much there to Drew, Monique and Michelle for a fantastic webinar. Special thanks everyone for your participation as well as for your attendance today. That does formally conclude today's webinar. To exit, just click on that cross on the top right of your screen, letting you know upon exiting, you'll be automatically redirected to a feedback form. Now, the feedback form only takes about 30 seconds to complete. However, it's really beneficial for CPA Australia as well as our panel, so please leave us your thoughts. Okay, and no final questions, just a lot of thank yous there in the chat box, so thank you very much to our panel.
Thanks, Linda.
Excellent. What I might do now is I'll pop on the music as you all exit. Thanks, everyone. Hope to see you in another webinar. Thank you.